Hello, Smart Money Tree Podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I'll be your host. Today, I'm joined with my good friend Doug Hagren. Hey, Doug.
Yeah, welcome. I'm glad to be here. I'm the articulate one for those of you listening.
Thankfully, the listeners couldn't hear my marbles in my mouth earlier because our great editor edited those out.
Well,
All right.
I'm here to let you know that there is an incredible bloopers copy for those of you that subscribe to the premium channel.
Yeah, the premium channel. Yeah, we have that too. All right. Well, let's dive right in this week. We are officially a week and a half away from the election, and I haven't seen too many things dropped at the last minute. Usually, right around now is when you see some dirty laundry being dropped on the public, and I don't know. I feel like it's all out there.
Kirk, I'm not going to get into the politics because I know we don't keep it this show, but where have you been? There's been about 5 or 6 things that have been dropped in the last 48 to 72 hours. Anyway, for those of you that want to find it, go to a different show and find it. But there's been quite a bit that's all of a sudden coming up, including accusations of this and this. It's like, what's the election time?
Yeah, I saw one against Trump, but I dismissed it because honestly, at this point, what's one more? I mean,
exactly.
It's at this point you're looking at 2 candidates, and I'm sure there's plenty of dirty laundry for both of them. But I haven't seen anything that's like raising an eyebrow. Like last time when Biden had the laptop, I was like, well, that's interesting. It's interesting that it's last minute, of course, and it's interesting that everyone's totally discounting it. Ended up being true, but you never know, right? They drop it at the last minute because they don't have time to vet it. They don't have time to justify it and say it's not true. It's just like, let's just dump this stuff on the public and let them make a decision. So I just ignore it all. But I haven't seen anything that's out of character of either one of them. So
no, it's all the same character. But at this point, what hasn't been said?
That's what I mean. Like everything's been said at this point. I mean, I saw RFK had a video out. I saw it on LinkedIn, which was actually really interesting. I'm surprised he waited till the last minute, but I found that to be interesting. I mean, I find him to be an interesting character. I'm not sure if he'd be a good president, but I think as a person, I think he's very interesting, just in the history with his family and just his his journey to try to get justification for JFK's death and all that. So he's an interesting character, right? Like he's you see him. I don't know if you saw this. I thought it was brilliant when the debate happened and he had his own debate because he wasn't allowed into the debate with Trump and Biden. So he had his own debate, and his debate was like they say something and then he responds. I mean, I thought it was like very well crafted, and I thought he debated well. You may not agree with his points. That's not my point. My point was I thought it was a great idea, right? It's something that like you didn't allow him in, so I'm just gonna do my own, and I'm gonna treat it like I was already there. And I thought it was really cool. So I don't know if I agree with all his points, but I think he's an interesting character. Yeah. And so, when we go through this and when people are voting, obviously people are going to vote wherever they're going to vote. I don't know where it's going to end up, but to me, it seems like it's maybe tilted one side more than the others, but none of the information you can believe in the last 2-3 weeks is true anyway.
Yeah.
And for those of you who are seeing or reading something and saying, oh, I wonder if that's true, it's not. Nothing's true with like a few weeks left to the election. It never is. It's not unique to this election every single time. It's all BS. It's all propaganda. Just ignore it. If you haven't made up your mind right now, then I don't know where you're living.
Here's the last thing I'm going to say on this. Two very, I think, these funny things that have come out. And where would you? This is just an indictment of mass media and the stuff that we're being fed. The first is, it says that MSNBC actually on live. This went viral on October 23rd, so a couple days ago. It showed a graphic, government experience as a POTUS nominee, and it showed John F. Kennedy and showed his years in the Senate and the House, said 13 years. Ronald Reagan, it's a governor, 8 years. And then we had, I think it was Nixon. I'm trying to look at the graphic. Maybe it said 11 years, state Senate and Senate. And then it says Kamala Harris, 21 years as DA, AG, Senate, and VP. But then Donald Trump, 0. No government experience as the POTUS nominee.
Yeah.
Might be forgetting the 4 years
Hmm.
he was already president.
Trump derangement syndrome once again.
Oh my goodness. I
That
mean,
reminds me of the Jon Stewart skit that he did. I think it was must have been I forget what it was like 8, 12 years ago, where Ron Paul was running and everyone and there were like 8 candidates and he was like second behind. I forget who was number one. It was when Romney got the nomination, but
mhm.
Romney was like fourth or fifth the whole time up until the end. But it was somebody who was like number one and Ron Paul was number two. And you see, and what Jon Stewart did was brilliant. He had these little vignettes of a montage of different news stations and them saying, "Oh well, he's leading, but you can't take your eyes off number four. You can't take your eyes off, but you can't count out number eight." And he was just like, "What about number two?" Like everyone just totally ignored Ron Paul, and of course that was a deliberate attempt by the media to manipulate so you wouldn't vote for Ron Paul because you never heard his name before. And what's fascinating is my dad told me he was an old time Democrat back when Democrats were different. Now, actually, even before the Democrats have changed in like the last 10 years, and they're almost unrecognizable from what they used to be from like the tens, maybe it's like the 80s to the tens. That was like but even before the 80s, they were different. And my dad was from that era where it was a little bit different. And the parties have evolved over time. And I just want to point this out before I get to my point. Um, but basically, if you look at the parties, they've evolved, and if you go back in history, you see they had other parties. But I don't know if anyone recognizes this. Do you know that the Democrats back in the day were in favor of slavery?
That is
And they
absolutely true.
were and a
It,
lot of the people who were pro-slavery were Democrats. You can look them up in history, and they're very in favor of that.
Kurt, the
And
Republican Party actually was the Whigs and somebody else merged, and it
yeah,
started in Wisconsin to fight the expansion of slavery over the Mason-Dixon line.
yeah, and so I don't know when that changed, but it was basically the Democrats were pro-slavery and the Republicans were anti-slavery. And I don't know what switched because I don't know if they did switch, but it is what it is. Somewhere along the time it switched, and the Democrats became very defensive about it and almost went overboard to apologize for behavior of whites against blacks. And I mean, it's our country history. I'm not saying anything that people don't know. But if you go to like Germany, and I say this because I had a conversation with somebody this week, and it was fascinating. Um, the Germans after World War II were very defensive about Nazis and their basically the Holocaust and all the bad crap that happened. They're very defensive about that, and rightfully so, right? I mean, they
It
did
is
a lot of
illegal to
bad.
do anything or even reference it in
Yeah,
Germany.
they did a lot of bad stuff, and the country's culture. If you were in an argument with somebody and you said, "Well, you're a Nazi," they would almost give up and walk away. Like they didn't want to be anywhere associated with Nazis, the Third Reich, or any of that. And so, almost like culture almost repelled it. Like they ignored it exist, and they went to the other end of the spectrum to show that they were not that type of person. And that held true up until maybe 10, 15 years ago, where the younger generation who didn't experience that personally, right? They weren't alive and didn't experience it. They stopped caring about that. And they started to be okay with that side of the spectrum. Not saying that they were Nazis, but saying that they were okay with if somebody called them Nazi, be like, whatever, man, like, I don't care. So it was a very different perspective. So I point this out because we live in the present, and because we live in the present, we don't always have context in how that relates to the past. And we might remember it, but we also don't remember history in a way that we've lived it. If you lived 100 years, you'd know this because you lived it. I've been around for a while, and I remember a lot of stuff that people were like, well, that didn't happen. I'm like, no, I remember that vividly. Like September 11th, I was watching TV. I remember exactly what's shown on TV, even though they said, no, that didn't happen. Like, why did I see that like 20-minute news clip of this happening? And so all this stuff. And so when you see it live, you have a different perspective than you read about it in history books. So this all goes to point out that when you are thinking about parties, like, and you look at recent parties, um, the Republicans up until I don't know when. It was probably the last one was Bush, I would imagine, Bush the second. Um, the Republicans were the party of war, and they were the party of the Constitution, and they had certain aspects of them that was like, I wouldn't say we were pro-war, and say we, I shouldn't have said that because I'm not a Republican, but they were pro-war, and Democrats were historically anti-war, right? They were the party of peace. They were the bleeding hearts. And growing up, they were bleeding heart liberals, is how they were known. They were very anti-war, and it's almost flipped. I mean, it's flipped. Like the Democrats are now okay with war, and I think that started with I think it was probably Obama where he started to be
I
okay with
mean,
it.
you got to go back to the '60s. Kennedy's who got us into Vietnam. So don't forget that
No,
the
I'm not. I'm
Kennedy and
not.
Johnson.
Yeah,
So
I'm not suggesting it's always the same. I'm just saying, like, if you think about but Vietnam, we had a lot of what they call them, the beatniks, the peace protesters. They're mostly Democrats, right? And that was kind of the thinking. So things have changed, and it's flipping again. So I only point this out to show that it's flipping again. Um, in that, and I was listening to a podcast the other day. I was talking about this, and they're talking about how the party in power has. They were talking about free speech in the First Amendment, which right now we actually have a huge battle about, which isn't being discussed enough. And is battle primarily with tech companies, and with AI, it's going to get exponentially worse. And I think the podcast was Mark Andreessen with I forget who else it was, but anyway, it was a great conversation about. I think Mark Andreessen's a heavy libertarian, so he's very much in free speech territory, and it was talking about free speech and said, remember back when the religious right were saying, well, this is how you have to think, and you can't fight us. Our word is law, right? And so they had control over free speech to some extent, and of course, other people, the Democrats, were against it. And now it's flipped. Now the Democrats are anti-free speech, and the Republicans are pro-speech. So it's the party in power who tends to want to keep power, so they want to control free speech. So we've seen the tech platforms, which are heavily Democratic, which are doing a lot of censorship. And I mean, I'm pro free speech. I don't care what party's in power. You need to be able to say what you need to say, or else you don't have freedom. If you can't say what you want to say, I mean, I'm afraid to say stuff. I mean, I would love to go out and say whatever I want, but
freedom of speech does not prevent you from dealing with the consequences. It just means that you legally cannot be held. So the good news is you have
right,
the conscience to actually self censor yourself, but having
right,
someone else censor you, that is where the amendment was created, and we have to draw the line.
right. And some people are being unbanked. They're being cut out of the financial system because of things they've said. I was just reading a interesting article on a Substack on the Free Press talking about this, where they were talking about a bunch of people who've got unbanked, and they weren't bad people. They were just somehow associated with something the government didn't like, and they unbanked them, or the banks unbanked them. But I'm sure the government influenced. So we live in a precarious time where it could go horribly wrong in one direction. For whatever reason, it never does. And I'd just like to point out, like, things always are going horribly wrong, but it never seems to go horribly wrong. So, cross my fingers that continues, that trend continues. But I think we always have to be on the lookout for things that we have to protect our free speech. We have to protect our constitutional amendments, because if we don't, then one party takes power and then it's all over, and then it never changes again because we become totalitarian dictatorship at some point because it won't flip. So we always have to be mindful of that, and whatever party you're voting for, and I'm not giving you an opinion because we don't do that in the show. But I think we always have to be mindful of the fact that no matter what we think, if you're in favor of something that is out of bounds, just something like censorship, because it keeps your party in power, just remember, if your party loses power, the other party can use that against you. And that's the whole mutually assured destruction part, which we've kind of lost track of, is when you do something really bad, the other side can use it. I mean, the Republicans went after Clinton, for whatever
For
shenanigans.
cigars.
Yeah, for cigars, for
Yeah,
shenanigans.
Cuban cigars are illegal there, Kirk, and we
Right,
shouldn't be importing cigars into the White House.
right. So they went after Clinton, and now it's open season on anyone to go after anyone. Now we have lawfare, They're going after Trump, and you could agree or not agree whether he did something wrong. It's not my place. I'm not a court. But the point is now you're seeing it. I don't think it's right. I don't think that should happen. I think it probably shouldn't have happened for Clinton, but they didn't like him and they went after him, and now it's open season on everybody. So the precedents that are set by bad behavior cause future bad behavior, and you could be partisan about it and say, well, my side didn't do it. Of course you did. Every side does it, and you can't ignore the fact that that's going on. However, I want to move because it's not a political show and we're talking way too much politics. Is inflation getting you down? Do you feel like your money is worth less every time you open your wallet? Is shrinkflation frustrating you at the grocery store? Well, I have an answer for you. We're giving away free money. That's right, I said it, free money. I feel like I'm not doing my part to create inflation. Why does the government get to have all the fun? What could be better at increasing inflation than giving away free money? No, I'm not an employee of the Federal Reserve. And no, I'm not an employee of the US government either. And no, I am definitely not printing it myself. But it's free. What more could you ask? Well, you might ask, is it real? Well, yes, it's totally real. I'm holding it in my hands right here. See? Oh, wait, this is a podcast. You can't see it. Either way, I'm holding in my hands right now and I want to give it to you. If you want some free money, go to moneytreepodcast.com/free money to get your free money today. Follow the instructions and I'll send some to you. Enjoy your free money today. I'm not the Federal Reserve, so I only have a limited supply. This offer is good until I run out. Go to www.moneytreepodcast.com/free money to get your free money today. I do want to show something that I saw today, which I thought was interesting. And this is the voter turnout by state in the last presidential election. So what's interesting is
look who's number one.
Doug's state, number one, Minnesota, highest voter turnout, somewhere around.
I can tell you the lines are everywhere.
Yeah. I actually went to register. I didn't know if I was registered, so I went to register yesterday and realized I was. And there were already people voting. There were already old people lined up to vote. I'm like, okay, good for you. But Massachusetts, looks like we're about 10th. Still ahead of the national average, and then of course you've got on the low side, just above 50 is Oklahoma, Hawaii, Arkansas, West Virginia, Tennessee. I mean, Texas. I mean, some of those states. I'm surprised Texas is low. Some of those states you don't have to worry about because they're not purple. They're definitely one clear color, and so in my state, I'm actually surprised people vote because I'd be surprised if it ever goes the other direction. We're very left leaning. But it is interesting. So
I'm
I just
going
thought
to
I'd
say
share
this:
that.
if the Republicans actually want to win, probably should look at this because look who's leading the number of voters on the charts as a lot of the blue states. So, maybe getting out there and getting to the polls would be, in their advantage if that is something they're concerned. Because look down at the bottom: Oklahoma, Arkansas, West Virginia, Tennessee, Texas. A lot of those tend to be more red states, and the voter turnout's horrendous. So, do you really care? So I'm just saying.
Well, I think it brings up an interesting thing. So we're moving the politics out of this, obviously, because it's agnostic. But looking at this statistically, right? Statistically, the Democrats win the popular vote. Like just historically, they won the popular vote. Doesn't mean they will, but historically they have. But of course, they're in states with heavily populated areas like California, big population, New York, big population. So I can understand for sure, like winning the popular vote, and then people say, well, we get rid of the electoral college, and like because they only have a few states that count. Like, yeah, I know, but you're just creating bigger problems because then you can cheat everywhere instead of just those states. So I don't know. I mean, we haven't had fair elections in a long time, and I don't think that's going to start now. But I do think that's actually a laudable goal is to find a way to have fair elections. As I was talking to somebody the other day, what do you mean? Of course the elections are fair. Are you saying that Trump's wasn't fair? I'm like, no, that's not what I'm saying. I'm saying that none of them have been fair. I mean, we have every institution in our government is corrupt in one way, shape, or form. That is proven fact, at least by what's come out in the media. Every single institution has corruption. A bunch of nonprofits do, but somehow 50 different states with 50 different electoral systems are all pristine, and there's no corruption, there's no false voting, no illegal actions. I mean, to me, it's just laughable when you could see arrest records of people who've been caught by illegally tampering with elections. Now, it's obviously not that many, and you could argue, well, there's not enough to make a difference. Yeah, but those are how many people have gotten caught. Like, you don't know the extent of it. But I wonder, it makes me wonder, like, we have this thing called blockchain. I like the fact of anonymous voting, because if it's not anonymous, then you get targeted, and that's not a good idea. But I wonder if there's some way to do some sort of a blockchain system where you can track people who've voted, so you don't get this double count, you don't get illegals voting, you don't get dead people voting, you don't get all the stuff, all the shenanigans, you don't get vote flipping, by the machines. There's a lot of vote flipping that apparently was. They did an audit on, I won't say the state, but one of the state, they audited 4 machines, and like three of them were the 3 of them were faulty. They said, all right, we're good enough. And one of them had vote flipping, which means that you vote for one and went the other. I'm like, oh my god, like, so no matter what happens, like, I don't know, I don't trust anything these days. But I will say that it is important to do your constitutionally allowed right to vote, and people should, and vote for whoever you want. But I do find it interesting which states vote and which states don't. And Minnesota's high up on the list. So kudos, Doug. Good job. Keep flying that voting flag out there.
I'll definitely be getting my button this year. And I know we don't want to talk politics. There's one last thing I want to say on this. It's more against the media, which is really funny. Which way does the media tend to lean, Kirk?
Most of them lean left.
Most of them lean left. You'd think that, right? But I'm starting to see more and more rhetoric out there that's saying, the only reason that Trump is doing well is because the media has been propping him up. I almost like threw up when I drank that, because we know that's typically not what has happened. But
even Fox has been against him.
Yeah,
I mean, it's not necessarily just left.
But that's the spin. That's the spin. It's like, oh, well, they're propping him up. When? So again, I'm not saying for or against Trump. It just cracks me up. This is the spin of voting season. Moving on. So
yeah, I think the hard part for people is if you're for Trump, you see the manipulation. If you're not for Trump, if you're very anti-Trump, you don't see the manipulation. And so I want to talk about this. And it's not Trump derangement syndrome, but this is what we call like home team bias. So if you're watching sports, right, and you've got I'm a Red Sox, I wouldn't call myself a fan. I'm a fair weather fan. I'm a Bruins fan, right? So I'm a Bruins fan. The Bruins are playing. I'm rooting for the Bruins, right? And they're playing. Let's say I don't know who they're playing. They're playing the Lightning, right? Playing the Lightning, and somebody has a bad call. I'm like, come on, ref, that's a bad call. Everybody starts yelling at the screen, and I see this all the time because I'm very agnostic. I've found a way to disconnect myself from it and still enjoy it. Like if I'm going to a game and I'm sitting next to somebody like, oh, that's horse crap, rep. That was a terrible call. And I'm like, oh, no, actually, that was a good call. Like I'm not I'm a fair weather fan. I'm not tied into a group. I can sit there and be like, no, actually, that was a good call. It's against my team, but oh, I get it. It was borderline. I'll give it to them. Of course, you're going to piss everybody off around you because they're like, "Oh, you're for Tampa or whatever." No. So the same thing happens with elections, and I say this because it actually does relate to the market. So bear with me. If you're voting for a candidate, if you cast your vote for a candidate, you are bought into that candidate. You're on candidate team A and candidate team B. That's who you're backing. So you immediately bias all of your thinking towards that candidate and against the other candidate. I've seen, and it's not a lack of intelligence. I'm going to be really clear. I was having this conversation with the guy who's got 5 doctorate degrees, very, very intelligent guy. And he's in Massachusetts. And he's very Republican, he's very Republican, religious Republican. And but he's really, really bright. And I was talking to him a few elections ago, and I was like, "So what do you think of this?" He's like, "Well, we can't let Obama win because the whole country is going to explode." I'm like, "Really?" I might not agree with some stuff, but I don't think the country is going to explode. He's like, "Oh my God, it would be the end of the world." I mean, totally biased in one side. He couldn't see. And I said, don't you realize that? And I told him, I said, I don't even think I'm going to vote. He's like, you got to vote. And I'm like, yeah, but my vote doesn't count. He's like, it doesn't matter. You got to vote. And it was like the intellect went out the window, and it was all party Republican, right? Now, the Democrats do the same thing. It's not just biased to the Republicans. Democrats do the same thing on their side. Pro Kamala, pro Obama, pro Biden, whatever it is. And so we all do it. We're human beings, right? We're tribal creatures. We love our tribe. We're backing our tribe. We're tribal creatures. And so it's really hard to separate yourself from that tribe. You can't stand back and be like, you guys aren't doing the right thing. It's really hard to do. And we've seen some big name Democrats come out and go to the Republican side. That takes that takes a lot of guts, and it takes a first level intellect to do that, because you got to be able to hold two contrarian ideas in your mind at the same time and choose one. It's really hard. I think it was Eric Weinstein came out, like, very bright guy. I don't think anybody can argue that. He said, he's like, I can't vote for Kamala this time. He's like, I'm a lifelong Democrat and I can't. I was like, interesting. Like, what is going on that is causing these people to do that? So where I'm going with this is this: when you're investing in the market, you have the same bias. If you're long the market, if you bought the S&P, you think the S&P is going to go to the moon. Go higher, go higher, go higher. If you're shorting the S&P, go lower, go lower. You are on team A or team B. And the only way you can disconnect from that in the market is by not investing. That's the only way you can keep yourself centered around reality. Because as soon as you buy, your confirmation bias kicks in, and you're looking for everything that says bullish markets are a good idea, and everything says bearish you're ignoring because I'm bullish. I'm gonna ignore this bearish stuff because they're lying. They're wrong. And so whatever you think, whatever side you're buying into, that's your bias. And so you're gonna have confirmation bias for anything that's good, and you're gonna ignore everything that goes against your confirmation bias or your thinking. And this is really dangerous when it comes to anything, especially investing. Certainly politics too. I mean, I would argue that both parties would elect Hitler if he came into power because he's in their party. And you might say, well, Donald Trump's Hitler. Like, we would never do that. Yes, you would. We all would. And that's the point, is we would all do it. The Germans did it. There's nothing to say we couldn't do it here. And everyone is susceptible to this, because once you buy into your team, all of a sudden, no matter what your team does is good. Even though it's not good, you're going to say you're good. You're going to back it. Same thing with investing. You're going to back the bullish thesis, which means you can't think independently and say, well, when's a good time to remove myself from this market? That's really hard. Traders spend years perfecting this ability. And you know what's and if you can do this, you're a first-rate investor. If you want to be better than that, which is a rare skill indeed, even the professionals will say they can't do it, is something like what George Soros does. Is you go super long in one direction, and as soon as you're proven wrong, you don't just sell, you sell and you go short. So when Trump beat Hillary, he was heavily long Hillary. So he stated this. I think he lost like $1.2 billion on the trade. Heavily long Hillary. As soon as Trump won, he lost $1.2 billion. So what did he do? He immediately went the other way and did the opposite thesis and did the pro-Trump thesis. Even though he's very anti-Trump, he did the pro-Trump thesis and went the other way, exact opposite. That is a rare skill that almost nobody has. It's really hard to do. But I will tell you, that should be your aspirational goal, is to say, all right, I was wrong. Not only was I wrong, I'm going to take the other side of this and start to make money, because my ego is not important. Because when you're wrong, your ego says, well, these other people are wrong. We're just going to wait till it happens. We're going to wait till we're proven right. And you're still wrong. And our ego won't allow us to make that correction. So we'll either, if you're shorting the S&P and it keeps going higher, be like, well, eventually it'll crash. Eventually it'll crash. Well, you're just going to keep being wrong, because you don't want to admit that you're wrong, and your ego won't allow it. So I point this out because we all do it. It's election time. So it's a good chance to step out of your shell and just say, hey, what am I doing and thinking that is maybe incorrect. Maybe I'm missing something, and maybe I should rethink how I'm looking at things. Because if you can do that with politics, I'll tell you, investing will be easy. Politics is the hardest one. But investing is really, really the same way. I mean, the markets are overvalued. Nobody's going to argue that. Should you short it? No, not saying you should short it. Not saying you should go long. Just saying they're overvalued, and it's something to think about. So if you're happy because you made a lot of money, you should think about your position. Do you want to keep it? If you think it's going to crash, you should say, well, is it going to crash? I don't know. Maybe it keeps going higher. But you need to be able to think in three scenarios. What happens if it goes up? What happens if it goes down? What happens if it goes sideways? Because those are the only things that can happen in the market. So that's what we call scenario thinking. Doug?
Listen, I'm trying to pull it. I can't locate it right now. I've got some stuff that I've shared probably going back a couple of years ago with you on this, where even during 2008, when everything started to go to into the toilet, those that had been very bullish continued to be increasingly bullish and increasingly stubborn that nothing was happening and nothing was going wrong. And they've actually done studies on this, that generally speaking, the higher the degree, the higher the certification, the more you are, considered to be kind of at the upper echelon of knowledge in a particular subject, the more stubborn you will be about changing that. You'll actually double down as a way of egotistically kind of proving to yourself and others that you are correct. And when we look at scenarios like you're talking about, where hey, I went all in on Hillary and then I was wrong, and now I'm going to adjust and go in on Trump, or whatever situation that is. If we take that to the financial space, or even just the world of journalism and talking heads out there, you see this a lot of times, especially in sports, right? Because what happens in sports, I mean, you could be all in on a team and then there's one little injury or something happens, or just, preseason hype doesn't work out the way it's supposed to be. And then you get into the regular season and they're not playing at the level expected. Things are not clicking. And you'll see that someone who was like, hey, I think this is going to be the best team this year, absolutely 100% the best team. You'll have certain people who continue to say, oh, no matter what, this team's going to turn around. You'll have others say, you know what, this team's going to struggle this year. Here's this problem. And it is very common, Kirk, that what will happen is that there will be a tremendous number of people who will jump in. And when they jump in, they will attack that person. You said this. And there's one particular individual that I can think of that deals with this and addresses this a lot. I'm not going to name the name of their show, but they said, look, yes, I did, but I have the right to change my mind and my opinion given the new information that is now out there. And they are held accountable, especially in this world of social media where everybody's got a screenshot. See, you liar, you're lying. You were totally this way. Yes, I was. But that was then, given the information that I had then. And now I'm not refuting. Now, there are people out there that will absolutely pretend like I never said that. But the good ones say, yeah, no, I'm not saying I didn't say that. But understand that was 6 months ago. This is now. We have new data. That new data says it is time to make some new decisions. Okay. And let's roll this back to what we're talking about right now financially. Okay. There is, you think about portfolios and you think about, kind of this recency bias. I can't tell you, over the last 15 years of this bull market, it has become increasingly common to hear the only place you should be investing is the S&P 500. And why? What has it done? Look at how great it is. Yeah, it's been incredible. The same thing with real estate, Kirk. Real estate has done incredible over the last 10, 15 years. Now, we understand why that has occurred. Okay? It has occurred mainly because low interest rate. I mean, all the stuff we've talked about, low interest rate environment, tons of loose monetary policy, lots of M2 supply out there, number of reasons that's occurred. But there now is this belief that this is a permanent, like this is the way it is and the way it always been. You got to check history. You got to go back, tying all of this stuff together. We were speaking on in politics. You got to look at that. Since now this again, my numbers are going to be a little bit wrong here because again, recently we've had incredible performance in real estate that is well beyond the means. Okay, so we've had extreme stretch to the positive side of that, but historically, and again, I cannot remember the Nobel Prize winner economist that stated this. For the listeners, I apologize, but basically, the residential real estate's appreciation since the end of the world of Civil War was around 3%. That's inflation. Now, you get arguments all the time. No, I've got all this investment. I'm making, well, it's different if you're cash flowing it and you're making money from rents and you're able to buy that down because that income dividend is separate from. Now, if we're looking at stocks, dividend stocks, the performance of that stock and the dividend that they produce is going to be at some degree correlated together. When you look at the overall performance, it's not like, hey, look, the stock is averages the same 8% as everything else, and it's got a 4% dividend. It's going to do 12%. It doesn't work that way. The dividend is part of the calculations that go into the performance of the stock and why people buy it. It's why growth versus value, dividend, income, etc. But real estate doesn't work that way. Real estate, the value of the property is completely independent from the income it's producing. It's completely independent from the debt that it has on it. So yes, the argument is if you have investment real estate and you're making dividend money, in other words, rents on it, then the value that you're taking on that net return is going to be a combination of both of those things. Okay. And that helps tremendously. But for the average person and the way they look at that, it's like, well, if I buy a property, my net worth, look how much that's tied to net worth. That was actually a marketing campaign from Freddie or Fannie Mac to say, look, you want to be wealthy, you got to buy a house. And it was incredibly successful. And real estate has done very well recently, but historically, it's basically just kept up with inflation. And if you look at gold right now, gold actually, there's some charts that were out there that shows that gold has actually outperformed the S&P 500 over the last, say, I think 20, 30 years. It's outperformed real estate, right? So the real estate actually hasn't still performed all that well when you rate it against other asset classes, but it's tangible. You hodl it, you hold on to it, it's yours, you see it. We're starting to see, again, the same challenges we saw back in 2008 and I've got a client of mine, he bought a house in the Texas area, and he's trying to sell that house. He's trying to sell his previous house right now. It's not moving, and he's unwilling to come down on the pricing that he's going to sell it at because he doesn't want to dip that sale price of his current house in order to try to get it to sell. He's afraid, but if it doesn't sell, now I've shot myself because I've lowered the price and it didn't sell. Now I've reset the market to sell lower. You're starting to get into what these situations, and he is beginning to communicate the fear that he has that he's taken on this new property, all of the expenses there, all of the expenses of his old property, and yet he's tied up with his liquidity. And we're starting to see more and more coming out about that access to capital and that liquidity issue of the fact that the majority of wealth in America is tied up into real estate. But again, the whole point of this, and I'm in touching on some of these segues here that are very, microeconomic details, is the fact that, again, recency bias. The data that's been around has been real estate, S&P 500, only way to invest. But if you go back in history, there's plenty of data that shows that that is not the case. And we are on potentially, again, no predictions, the precipice of a historical reminder that you may need to change your thinking. You're going to see people that are going to follow that real estate wherever it goes, no matter the circumstances, and be continuously telling you it is the place to be. You're going to, and a lot of them hold on to it. It's their thing, and they are the experts. You're going to see the same thing on Bitcoin, the same thing on gold, the same thing on the S&P 500. But the reality is as the new data comes in, as the new metrics come in, this becomes the point to reevaluate whether or not the truths that were there are no longer the truths of the current circumstance. And that's when you have to be open to changing your mind, and changing the way you're going to look potentially and what is going to be the place, you need to make your decisions now, whether it's politics, whether it's investing, which leads to some conversations of where some things, we're starting to see some experts out there, some big players, the whales of the world are starting to shift significantly where their investment focus is going from where it was. Warren Buffett has significantly downsized on certain holdings that he's held for decades. Why? Because the data that's out there now says it's time to make a change.
Yeah, I want to share some breaking news this week, which I think is actually be very helpful to support Doug's point. So one is Goldman Sachs came out uh, in the past few days, and they said basically they kind of pointed out the S&P 500 is up about 23% year to date as of that day. Their estimates for the next 10 years is a annualized nominal total return of 3% for the next 10 years. 3% for 10 years. I think you can kind of like push back from the table and go home at this point. I mean, if that's what the return is for 10 years, and let me share a chart here. There's actually a few charts I wanted to share. First one is, here we go. So the first one is the irrational exuberance chart. So it looks at the top, the dot-com bubble, and it looks where we are now. The dot-com bubble was like 47x, and right now we're about 40x. And this is the CAPE ratio. It's one that a lot of people look at. You can also look at Jeremy Grantham's company GMO. Although he's kind of retired right now, but it's his company. He's one of the named partners. And every month they do this valuation chart. And this valuation chart basically looks at all asset classes, and it looks at a 7-year annualized return of those assets. So effectively, so you can understand it, what it means is looking at U.S. large cap is negative 5.7%. So if you look at negative 5.7% times 7 years, you're looking at a 40% drop in the market over the next 7 years. Now, that's a lot. I'm not going to lie. You can look at international large cap. It's 0% return over the next 7 years. And the best performer is emerging value, which is 4.2. So you're looking somewhere around 28 to 30% over the next 7 years. So, but emerging value has been high for quite some time, and I'm not sure that the valuations are going to be justified because a lot of reasons people aren't investing there. But I will point this out. This is the historical average long term is 6.5%, and that's for U.S. equity. Now you're looking at negative 5.7. That's a huge deviation from historical norms, which means that we are severely overvalued in price. Now, I'm going to show another chart here, and then I'm going to share some other breaking news. Let's see if I can find the chart. Doug just chart bombed me, so I can't find anything.
Hey, when you're good at something, you
Yeah,
gotta
gotta go with
express
it.
your talents.
All right. Well, anyway, I'll see if I can find it. But the other few points I wanted to make before I get to the other breaking news. So as Doug said, there's a few notable investors who are Warren Buffett being one of them, and basically Warren Buffett is selling all of his bank stocks, or I don't know if he sold all of them, but he's been selling them slowly, and he just dumped a big position of Bank of America. That was public. He still has 10%, but he looks like he's selling it off. So I won't get into the Bank of America analysis because I don't want to have to put 50 disclaimers on the show. But let's just say he's dumping a bunch of bank stocks. So what does he know about bank stocks that the rest of us don't? Well, we'll get into that in a minute. Here's another one by the Motley Fool. Stan Druckenmiller, does he know something? He's making a big bet against the Federal Reserve. So, there are a bunch of people who, Stan Druckenmiller being one of them, who, when they make a bet, you should pay attention. It doesn't mean they're right, but you should pay attention, right? And so if you're looking at all of this data and you're seeing, all right, the market's extremely overvalued and a lot of big investors are lightening up their positions or freeing up cash, which you should always have. But if they're doing it now, you should probably have more cash. We're going into an election in the next week and a half. And frankly, the way I would look at the election is it's going to be a lot more sizzle than steak. Um, the steak's going to be fine. But if you're looking at the election, there's a 99.9% chance that it's going to be a dud and nothing's going to happen and it's going to be fine. Um, the only scenario that I worry about is that we don't have results at all for weeks. That would be a really big speed bump for the markets because then the knives come out and then all the politics come out and you want to talk about propaganda. Oh, it's going to get 10 times worse. Now, some people are worried about that's going to start a civil war. I can tell you it's not. If you think it is, it's not. If you're looking at,
Maybe within households.
yeah, maybe within households, but if you're looking at like, the good old boys from like West Virginia are going to come to your city and start burning your city, it's not going to happen. Okay.
Hey, I live in Minneapolis.
Well, I
Anyway.
can't speak for Antifa. They obviously burned a bunch of cities, but I haven't seen them since Biden got elected. Huh? I wonder where they
Go
went. That's
figure.
interesting. Go figure. Um, but anyway, so point being is, I think it's going to be a lot more of a non-starter than people think. It's not saying you shouldn't be prepared. We're prepared. As I've said, there's a chance it could happen. You have to look at all scenarios, but I think it's a low probability chance, and I think that while there will be shenanigans in the election, I can guarantee there'll be shenanigans by both sides. But I think it's a low probability something bad will happen. So the only thing I'm worried about is that we don't have a result.
Kirk,
Now,
shenanigans aside on that, I just want to say, what have we constantly said? What is the one thing that the markets can't stand the most?
uncertainty.
Uncertainty. And it
Yep.
doesn't matter why. It doesn't matter about pointing fingers. It doesn't matter about manipulation. It just matters as, like you said, this gentleman that you were talking about made a bet on Hillary. Hillary didn't get elected. He switched to Trump. If they don't know where to switch to, the markets will panic.
Yeah. Yeah, Doug didn't want to say his name, but that's okay. He's like the boogeyman. You don't want to say his name. All right, I'm going to share this. And I'm going to go into the news. So here's the SAM rule, and there's a recession indicator. Just like any rule, like the inverted yield curve, you never know if it's accurate or not, but it is picking up. So it does point out it leading to recession. Just something to keep an eye on. And lastly, I'm going to point out some news before we got to wrap it up here. And this one was a buddy of mine sent to me. I didn't see it, but it's fascinating. So there is a proposal, a shareholder proposal put out for Microsoft. And the proposal is this: they want to put Bitcoin on its balance sheet instead of cash. Now, Michael Saylor has been doing this, and he has what I would argue is a Ponzi scheme, but he's made a lot of money doing it. And his company is growing really fast, in part because of financial engineering. And I'm going to try to illustrate what he's done, but I'm probably wrong. So don't send me hate mail if I'm a little off, because I literally just looked at it this morning and haven't had a chance to study it. But my understanding of what he's done is he's basically borrowed money at like close to 0%, let's say 1%. So let's say I borrow $100 million. I use that $100 million to buy Bitcoin. And then Bitcoin goes up like 5x. Okay, well, I can either pay back the original loan, or I can just go get another loan and get another loan for like $500 million, because now I got $500 million in Bitcoin. I just go get another loan for $500 million. And then Bitcoin goes from another 5x. And then, so my understanding of what's happened, he's basically used his balance sheet, Bitcoin in the balance sheet, and the expansion of the balance sheet, because Bitcoin's higher, to effectively go out and borrow money, and everyone's willing to lend it to him because they know. I think he's done some convertible bonds too, which allows you to actually benefit as a bondholder. So I think people like that. But basically, what he's done is he's levered up his balance sheet by getting cheap debt and then using that to buy an asset that is expanding, a number of X, like 5X, 10X, whatever it expands. And I think that's a really interesting financial engineering play. I'm not saying it's good or bad. I'm just saying it's really interesting. Nobody's ever done this before. nobody's done it like he's done it. I know Elon put Bitcoin on his balance sheet at one point, but
It's
with
very
Tesla,
similar to what real estate has done, right? You borrow and you take it, it grows,
right?
you borrow more and buy more real estate. I mean, it's margin account, basically.
Well, here's the thing. So Doug's right. It's just like real estate. The difference is if the whole financial system implodes, you still have a place to live. If Bitcoin implodes, then you're effed. So I think I call this a Ponzi scheme because it's all dependent upon the future of Bitcoin. Now, if the future of Bitcoin is certain, or if you feel it's certain, then you might want to make a play like this. If you don't think it's certain, then it might be a really risky move. Now, if it was me, and I'm just hypothesizing here, Microsoft, and I know you guys all at Microsoft listen to me, so take notes. But if you take the balance sheet, which is billions of dollars in cash, and you invest a part of that into Bitcoin at the right time, and Bitcoin doubles, you can pay back. You can sell half your Bitcoin. That goes back into cash, and now you've got Bitcoin free and clear in your balance sheet. And whatever happens to it, there's risk free. Now, the timing is important. If you're doing it after it sells off 70%, well, you got a pretty good chance of making a lot of money. If you do it at the peak of the market, well, it might take a little time for that to happen. So timing is really important when it comes to cryptocurrency. But I do think it's an interesting idea because if more companies start doing this, imagine where the price of Bitcoin is going to go, and imagine the price of the stock of where that stock is going to go, because now you've got a company that's appreciating it, let's say 20% a year, and now you've got Bitcoin appreciating it, let's say 50% a year. Well, you've just increased your growth. Now, I'm just explaining the concept. I'm not saying anyone should do this or whatever, because Raoul Paul talks about this. He said one of the most dangerous things you could do is leverage, because Bitcoin will go down 70%. So leverage it'll clean you out, right? If you take 50% leverage, you get cleaned out in a down cycle, unless of course you do it in a down cycle, in which case the risk is lower. But anyway, point being is leverage is really risky, and I never advise anybody to do it because it's highly risky, and it'll basically clean you out. It'll bankrupt you because if it goes down 50%, you're cleaned out. So don't do that. Real estate's about the only thing that's allowed to be leveraged without a whole bunch of risk, and even then, they're pretty assured that they're going to find another person to fill the house. So it's a different asset. Anyway, we're going to wrap it up. But I just really thought this was an interesting direction. It sounds like the board of Microsoft is not for this, so it probably won't happen. But I do think it's really interesting, and I think it's a good idea for companies to consider this, even on a small scale, just to try it, just see what happens. And if it blows up and it's a little bit of money, whatever. You guys waste so much on. I mean, big corporations now spend so much on lawsuits and class action lawsuits and all sorts of shenanigans. Just imagine it's one of those. It's just one more. you know. Anyway, I just thought I'd share that for those of you Bitcoin hodlers. That's good news. So, well, I guess it depends if it passes, but it's good news that people are talking about it. Doug, wrap us up here and take us home.
Well, sorry, I was going to say as well, and there's another chart in there, that there's been an exceptional increase in flows into Bitcoin recently. And what's been really interesting about that is even with these increase in flows, Bitcoin's pricing hasn't moved. Actually, it's kind of declined, which is certainly interesting to watch. The other thing to keep in mind is that Bitcoin has really relatively remained flat since 2021. It's kind of right back where it was in the early to low to mid 60s thousands, 60,000s in the early 20s. It fell, it's come back, but it still seems to be really struggling to push forth on that ceiling. What I do think is really interesting to see is that there has been finally some coming around of those that are in the Bitcoin corner to finally admit that it isn't necessarily the currency or the replacement for the US dollar that people initially pushed it to be. And that's something I've been stating for a long time. It's like I'm not pro Bitcoin, anti Bitcoin. But when you talk about the replacement of a currency, it's got to be something that has some stable ability to have at least a value that is predictable and repeatable. Otherwise, you're dealing with massive deflation and massive inflation all the time. Bitcoin, they're starting to come around and admit that maybe instead of a currency replacement, it is an investment, a hedge, and that's fine. there is no argument that it is a speculative investment. As you said, it is digital, it is superficial. It's not like holding a gold bar in your hand that you can throw into a safe. It is something that has an intangible value, purely speculated by the opinion of those that want it or not. And it is, it is a technology, and it's been correlated to technology for a long time too, which of course has been kind of flat as well recently. So just some thoughts on that. Again, not for or against, but I like that they're finally coming around that, hey, something that moves like this, it's a speculative investment, and there's great opportunity, but there's also great risk at the same time. And listen, speaking of great opportunity and great risk, great opportunity is having the right education for your child. And for many of you listening, I'm sure you have kids that are probably middle school, high school. They're getting closer to that time where you've got to start thinking, where do I cut my checks to? So the great opportunity is going to a school, whether it's trade school, whether it's a four-year education, doesn't matter. Whatever that education can be to create an extraordinary outcome for your child where they're going to thrive and they're going to enjoy the education they got, and they're going to be able to walk off stage on Friday with a degree somewhere or a certificate somewhere into a career opportunity on Monday and not have to search. The risk is go out there to debtclock.org and look at the amount of debt that is out there right now. We're talking trillions of dollars of student loan debt. And add that to credit card debt and mortgage debt, which is not bad debt, but it's out there. We're starting to see charts we've been showing for weeks. Debt in households is on the rise in many places. And a lot of people are sitting there looking back going, geez, is college worth it? Look how much we've paid. It doesn't have to be. There's actually a number of ways and strategies that you can put forth to get the cost of college down, but also a number of ways in how you pay to significantly use the dollars that you have more efficiently to return money to your future, to your opportunity, your retirement, et cetera. Listen, if you're not doing anything, they're going to take all the money you want to give them. Congratulations. Hope the outcome is good for you. But if you want to reduce your risk, become an informed college buyer. And we've got some really good tools and strategies and planning. We are experts in this. Go to mergentcollegeadvisors.com. MERGENT, mergentcollegeadvisors.com. Download our free scholarship report that you could get right now to learn what kind of money is available for you, and then talk to us. If you really want to be efficient with your funds and reduce your risk of what it's going to cost for college and increase your return on investment, you need to take that first step.
I agree. Thanks, Doug. And one more piece of news I wanted to share before we wrap it up, because I forgot about this and I thought it was really good. That I think it was actually Doug sent this earlier, but what it was talking about was basically a news story. Well, it was Morning Joe, but basically just said that a Trump plan would cut GDP by 8.9% because they're basically talking about cutting the government. And I want to leave those listeners with this, and voters too, is that I don't know if that's true or not. I don't listen to media. I think all media is junk and garbage and propaganda. But directionally, I don't disagree. If you're cutting the government, you're effectively cutting the GDP, because I think it's like 40% of our GDP now is made up of government, which isn't a good thing, right? And maybe the GDP going down is okay because you're cutting the government, which also cuts our spending, which is also a good thing because our debt is going through the roof. I don't know how that's possible, even if you had somebody like Kennedy who came in and wanted to clear cut the government. And, Trump talked about it, but, he's president for 4 years and that didn't happen. So I'm not sure it's going to happen. But somebody like Kennedy, who definitely wants that, I would be curious to see the repercussions of that. I think they'd be good. But it would definitely be volatile. And of course, whoever's in power would get blamed for that. So I want to leave everybody with this, is that any solution that is logically a good solution, cutting government expenses, not printing as much money, all the things that we all know logically are the right choice, all of them lead to pain. And I want to be really crystal clear about something. All of them lead to pain. What's the old adage that we talk about in the show? Everyone's a libertarian until it happens to you, right? It's all well and good until it happens to you, and you're like, oh, that was a bad idea. Like Milei in Argentina, he's got the people's support right now to do all the things he needs to do, and it's going to be painful. People are going to lose their jobs. It's going to hurt economically, but long term, it's going to be better. But it's going to be painful in the short term, and yet I think he's got the people's support to go do it. We don't have that in this country. We don't have it. Hasn't gotten so bad where we're just willing to try anything. And I think the challenge is the only time that would be palatable is if people are so desperate they're willing to try anything, and we're not there yet. Um, but that would be the time we'd have to reset everything, and you could make good progress. Until then, whoever tries to do that's going to get the blame, and I think that's biggest challenge in this country is that whoever tries to do the right thing will get blamed, and they'll basically be put on the chopping block. So anyway, wrapping up here for the weekend. Happy fall weekend. This is the weekend before Halloween. Hopefully everyone goes and sees a nice haunted house. There's a great one up in New Hampshire. If you're close by to New Hampshire, never been, it's called Haunted Overload. It is unbelievably good. Look it up online. It is crazy, some of the stuff that they do, but it is so good. And highly recommend anyone in the New England area go check it out. We've been a few times. It's so good. That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, wealth manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.